Hello guys, welcome to the third chapter in this second part. We are going to see technical indicators. Technical indicators is a mathematical calculation based on historic price and volume. They are a fundamental part of technical analysis and are typically plotted as a chart pattern to try to predict the market trend. Indicators generally rely on price chart data to indicate where the price is going, or whether the price is in an overbought condition or an oversold condition. Technical indicators are chart analysis tools that can help traders better understand and act on price movement. There is a huge range of technical analysis tools available that analyze trends, provide price average, measure volatility, and more. So as I always telling in this course, we are just going to see what we need to apply this trading strategy. So the first technical indicator that we are going to see is relative strength of index, RSI. The relative strength index, RSI, is a momentum indicator used in technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price. The RSI is displayed as an oscillator, a line graph that moves between two extremes and can have a reading from 0 to 100. Traditional interpretation and the usage of the RSI are that values of 50 or above indicate that the market is trending up. The value of 50 or below shows that the market is trending down. If the RSI value of 70 or above, it means that the market is overbought, and if the RSI is below 13, it indicates that the market is oversold. I personally use RSI with parameter 21 period close. So in the second place, we are going to see the second indicator, which is a stochastic oscillator. A stochastic oscillator is a momentum indicator comparing a particular closing price of a financial asset to a range of its price over a certain period of time. The sensitivity of the oscillator to market movement is reducible by adjusting the time period or by taking a moving average of the results. It is used to generate overbought and oversold trading signals, utilizing a 0 to 100 bounded range of values. I personally use stochastic with parameter 34 period, parameter K 5, parameter D 5, and simple. In the third place, we are going to see moving averages. In statistics, a moving average is calculation used to analyze data points by creating a series of averages of different subsets of the full data set. In finance, a moving average is a stock indicator that is commonly used in technical analysis. The reason for calculating the moving average of a stock is to help smooth out the price data by creating a constantly updated average price. I personally use two simple moving averages, one with 50 periods and the second with the 20 periods. So this is an illustration of my platform and how it's look like. In first place, we can see here the simple moving average 50 period with the blue color, and in the second simple moving average in the red color, which is the 20 moving average, simple always. And here we can see the stochastic with his parameter 34 55, and the RSI 21 periods. In the RSI, I'm using just the 50 horizontal line, but in the stochastic I'm using 3, the 80 horizontal value, the 50 horizontal value line, and the 20 horizontal line also. So this is how my trading platform looks like. So this is for today's chapter. I hope you